Hey guys, thanks for joining in. Today I wanted to cover an important but somewhat advanced topic regarding option expiration assignment of short puts and calls. Every trader should be aware that if the underlying instrument, in this case we're going to use stock, we're going to assume it's stock, is 1 cent or more in the money, at expiration, the Option Clearing Corporation will assign, in other words, automatically exercise on behalf of the long holder that option based on the price, the closing price, the last price, the close of business, 3 p.m. Central, 4 p.m. Eastern. Everyone knows this, but what most people that trade options, at least retail traders, don't know is some of the peculiarities with regard to the power that the long option holder has, and up to an hour and a half after the close of the market. This is very important for a number of reasons, and is more important now than it ever has been historically, and I'll get into that in a little bit. But essentially, let's use an example of Apple. Let's suppose Apple has earnings after the bell. You sold a call. Let's say you sold an at-the-money call just prior to the close of business, and when the last trade of the day happened, your call was out of the money. So you think, okay, well, the option will expire worthless. Generally it will, but the option holder has the ability up to an hour and a half after the close of business, which is what the automatic assignment by the Option Clearing Corporation is based on, to exercise that option. You're probably thinking, well, why does that matter? Because the stock can move in the after hours. So let's use Apple earnings as an example. Let's say right here, you sold, or you were short the 120 call on an expiration day. And the stock is 118.52. So that call would expire worthless, and you would just keep whatever premium you received, and that would be the end of the day, because it's the option, the long holder, it would not be automatically assigned, and the long holder would be stupid to assign it because it's out of the money. But if there's an earning event, it doesn't have to be an earning event, but that's typically a good example, in the sense that it can really create violent after hours moves. So if Apple were to report earnings or some other event or any news that causes it to go up. So let's say Apple closed at the 118.52, reported earnings, and it jumps up to 130. It really doesn't matter what it jumps up to. It just needs to, to create problems for the short holder, it needs to increase in value more than the strike price. So again, just to clear out confusion, we are short a 120 call on expiration. So it's out of the money. The stock closed at 118.52. We think we're done. Then earnings is announced. Traders in the aftermarket bid up Apple to 130. Those traders holding calls that they could have last traded at the close of business can then submit instructions to exercise that option. So in relation to the close of business, they're exercising an out of the money option. But in this case, because of the after hours move, it's in the money. So the point is that this creates massive risk for the short option holder in some scenarios. If it's a covered call or something like this, it's not that big a deal. But if you're naked short puts or calls, specifically in a significant number to cause margin problems, this could become a very big deal. Most people are unaware of that period. And I said earlier that it's actually more important than ever now. Well, the reason is something called daily options. Because in the case of Apple, it rarely deviates much in the after hours outside of an earnings event. The earnings event are never on Fridays, which is typically when options expire. There's not a whole lot of action in the after hours on a Friday afternoon, although there's no rule that says there can't be. But with daily options in the SPY, Spider ETF, options occurring Monday, Wednesday, and Friday of each week. While you don't have an earnings risk because this is the S&P 500, there can definitely be big after hours moves. So for those of you short puts and calls, specifically on the Monday and Wednesday, this is a real risk to consider, because you could be exercised on what you thought was an out-of-the-money, worthless option. So the easiest way to mitigate this is to either buy back, whether it's a penny or 5 cents or whatever you have to pay, that short option to close the position out during the market. Then you can't be assigned because you don't have the position. Another thing is you can actually hedge the position with stock, including in the after hours, to become delta neutral. Delta neutral trading is covered in another video. But it is possible to hedge that position so you come out the next day flat in your account. In other words, you don't have a large short or long position unexpectedly. This is, I know, kind of not very exciting things, as usually not a whole lot happens in the after hours in a market index or any of the individual stocks on a Friday afternoon. But it is something, it's related to pen risk, but you can definitely be exercised. And I want to make people aware of this because I don't want people, losing money and not knowing why. It's a bad situation to be in. And also remember that the SPY and a few other products continue to trade. Their options, they continue to trade. Of course, there's an after hours market, but the options of them continue to trade 15 minutes after the close of business. So now you have something that's trading a contract trading 15 minutes after the close of business. Something based on the closing price that then gives you the long holder an hour and a half decision, which they would be informed by the after hours stock price of whether to exercise that option or not. So just something to be very careful about anytime you're particularly naked short puts or calls. And like I said, in particular on the SPY, because of the Monday and Wednesday, which in most estimations has greater risk than on Friday, just because there's some more news flow. But it does occur. All long option holders, American equity options, have this capability. Anyway, I know there's a lot to get through. If you have any questions or comments, message me, contact me. Come back from additional videos where I'll explain other topics related to this. And have a good day.